Hi folks, in my last video I described several top ideas for year-end tax and financial planning that could come in handy to round out the tax year. Now in this video I'm going to outline a few more considerations that you might reflect on before year-end. Now some of these items can be done after year-end, but generally before your April tax filing. Let's dive in. First, I'll share some ideas if you have kids. Now if you don't have any children, then feel free to skip ahead. Did your child work at all throughout the year, either for you or for someone else? If so, consider having them put some of that money towards a Roth IRA. Now this can be a great way to start off some tax-free savings for their future retirement. Also, most people forget that you can always withdraw your principal contributions to a Roth IRA before retirement. It's just the gains in the account that have the 5-year or age 59 and a half, whichever comes later, rule. If accessed before this time, the gains are treated as ordinary income and a 10% penalty is also assessed. You have until April 15th to fund a Roth IRA for the prior tax year. Now in this same vein, if you have the ability to pay your children for services to your business, you can pay them up to the allowable limit in 2022 of $12,950 to get the full standard deduction and pay no income tax. Now I urge strong caution and strict rule following with this strategy. It's strongly advised that you work with a tax professional to be sure you follow IRS compliance and guidance so you implement the strategy properly. Remember that compensation needs to occur in the year. So we're running out of months really to get this child much income, considering all wages need to be paid in the calendar year to take advantage of the strategy. However, this could be a great strategy to start next year after you've had some time to properly set up things with your tax advisor. The second idea centers around offsetting and reducing your income for tax purposes. Now, this year hasn't been a great year for many investors. However, this does create an opportunity to capture some of those losses and offset some income. In 2022, you can claim up to $3,000 in investment losses against ordinary income. Any unused losses can be used to either offset capital gains accrued throughout the year. Now maybe you sold something, like property for example, for a gain. This can be offset by these investment losses. Any other unused losses can be carried forward to future years, so all is not lost. The last idea I'll cover today is all about protection. Most often, both annual benefit enrollments as well as a lot of business insurance renewals all happen around year end. Have you identified any gaps in your protection? What are your plans for family or business financial security if you are no longer able to work? What gaps might you have in your home or business coverage due to changes that just happen throughout the year? This is a great time to review your insurance and verify you are good to go confidently into the new year with everything buttoned up. Additionally, protection can extend to your legal documents and established entities like trusts and maybe your business structure. These topics are really too deep to cover in today's video, but suffice to say that they should be reviewed periodically so there aren't any gaps that could erode or derail your future plans. So there you have it, a few more ideas and items to make you aware of the opportunities for the current tax year as well as future tax years. If you found this insightful, please share with someone you care about and hit the button before you go. As always, keep doing life better and we'll see you next time.